All right, let's dive right into this. I want to walk through 5 amenities that will increase your short term rental profits. Short term rentals are growing in popularity as a real estate investment strategy, right? Investors are flocking towards them because of the chance to increase cash flow by renting properties by the night instead of renting based on long term leases. Now, to capture that cash flow, short term rental investors need to be laser focused on ways that they can increase their ADR. That's the average daily rate. And one of the best ways to do that, to increase your ADR, is by adding amenities to your properties that guests will pay more to utilize. It's no different than a hotel that has a spa, a pool, a great bar, restaurant, so on and so forth. You're going to pay more for that versus a property that just offers a place to sleep. So all this sounds great, right? But only if you can choose the right amenities, amenities that will allow for ADR increases that quickly cover capital expenditures as well as ongoing costs. Now, the Real Estate of Things podcast crew and the lending team at Lima One Capital have partnered to provide research that demonstrates the difference in daily rates that different amenities can provide. Now, the Lima One Capital market analytics team reviewed AirDNA data on 5 main amenities from short term rental properties across 265 national markets and their recent stays from summer 2022. So, what does that mean? A lot of data across a wide spectrum of geographies, right? And also very recent data. So, we're going to be looking at pool, hot tub, kitchen, gym, and being pet friendly, which provides the most bang for your buck. All right, first one. Let's start with a hot tub, right? $392 average daily rate with a hot tub versus $277 without. That is a 41% difference between having or not having a hot tub. Now, while you may think that having a pool or even a full use kitchen will give you more bang for your buck, the biggest return is going to be from a hot tub. Right? It's a bit of a surprise, right? I was a little surprised when I read this, but the numbers do not lie. And all the better. This is great news because investing in a hot tub is usually less expensive than adding a full-on swimming pool or a full-blown kitchen. You're going to see that 41% ADR increase, and that comes down to almost $115 more per night. So if we really get more and more granular with numbers, if you say the current national average, it's 61% occupancy, that means a unit with a hot tub could bring in $25,000 or more per year on average. Now, with that kind of cash flow, you're going to recoup your capital cost of adding a hot tub very quickly, a year, 2 years, maybe tops. So, a couple of markets where hot tubs are especially valuable: Santa Barbara, California, you're talking about a 55% increase whenever you have a hot tub versus not having one. And then Bozeman, Montana, Yellowstone area. Shout out to Kevin Costner. You're talking a 45% increase. So hot tubs, check them out. The next one we're going to go through, kitchen, right? $302 with a kitchen. It's the ADR versus $199. So renting out a room, a finished shed, or a tiny house, that has appeal for plenty of investors. But the numbers show that having a full kitchen available to guests, that is a key way to unlock cash flow. The full kitchen allows you to charge almost 50% more on a daily basis. That's real value that you have added to a short-term rental. One big piece to keep in mind when we say kitchen: don't skimp. The lesson here is not to skimp when developing your next short-term rental. It's going to be cheaper up front to provide a sink, a microwave, and a hot plate, right? We have a kitchen. Technically speaking, yes, but most guests want access to a full kitchen and they are willing to pay to get it. Moving on down the line. Number 3, pool. Right? At first, adding a pool seems like a way to significantly increase the average daily rate of your short-term rental. But The truth is that it's only going to add 25% or so to the average daily rate, far less than hot tubs, far less than full kitchens, right? So this means adding a pool should not be an automatic yes for short-term investors. That said, in some markets, a pool is going to add significant value to a short-term rental. Again, we're taking national averages in this data and pulling out, in some cases, generalizations, educated generalizations. But always remember that you have to do your own market research. You have to dig into your particular market, see what's working, see what's not working, and make a decision based on ROI at the end of the day. So let's look at Hampton, right? Hamptons of Long Island. You're saying a property with a pool in this wonderful area gets an average of $666 more in ADR. That's not the ADR, $666 more in ADR versus a property without one. No pool, ADR of 504 in the Hamptons. With a pool, $1,170. That is more than double. So if we say 25% increase, is it worth the headache? Is it not on a national level? All right, we'll make inferences based on that data, but look at your specific market. If you're in the Hamptons, that is a massive difference, and it changes the calculus for you on whether or not you make that capital expenditure. Another one, right? Look at a desert locale like Palm Springs, California. Right, similar story to the Hamptons. So some markets it's going to make a bigger difference. Some markets it's going to be below that 25% threshold. So do your research and make a decision based on data, not on hunches. Number 4, gym, with gym, without a gym. I personally, one of my favorite things when I travel for work, get off a plane, go run, shower. If I can't run, I always shower. I feel nasty after being on an airplane, going through airports. So that happens either way. But running after. So, you're like kind of out of town, get to see a new place. So I get the thought of, hey, you're on vacation, doing something, work out. So access to a gym, that's absolutely going to allow you to charge a premium on your short-term rental. But the percentage difference is definitely more modest than hot tubs or pools. So that means as an investor, you need to be more strategic whenever you look to add a gym. Make sure you're purchasing the right equipment so you can recapture the cost through increased ADR. Now, when we dive into the numbers, again, market by market basis, we see a common thread. Beach areas can provide better premiums for gyms. On the Jersey Shore, I never watched the show, but throw a fun fact out there. I'm a massive Bachelor, Bachelorette, Bachelor in Paradise fan. Peter's season was awful. Hannah should have chosen him during her season. I'm frustrated thinking about that. All right. And Jersey Shore, the ADR is going to increase 25%, right, from 552 to 619 when a gym is included. Key West, Florida, this is another market where you see that big positive jump from 509 per night to 579 per night. It's a big gain on an annualized basis, considering Key West has almost 73% occupancy rate, one of the highest in the nation. All right, to shut us down, we're going to number 5. Pets allowed, no pets allowed. What do you do? This is an interesting one, right? It is low single digits. You're talking a 4% increase for allowing pets versus not allowing pets. And it's not as simple as that, though. You have to get in the nuances. We're going to talk a little bit about the platform you're using to rent out your short-term rental. So, unlike other amenities we've gone through, one big difference that I feel like we do have to call out is that allowing pets does not require a major capital expenditure, right? You don't have to buy something big, have construction going on like you would if you're doing a hot tub or a pool, respectively. You don't have a major capital expenditure. So you might choose some other investment like type of flooring to reduce wear and tear from pet paws, but generally, there's not a big capital expenditure here. Now, that's good because we talked about the fact that the financial upside, that is also very limited, right? Just a 4% premium on the ADR. This may be because guests are going to have to pay a pet fee and or a cleaning fee on top of the actual rate of the short-term rental. And if you're considering allowing pets, you need to review the terms of service for the platform you're using to rent out your short-term rental to see if they're going to receive a portion of pet fees or cleaning fees. So you really have to look at how these fees are broken up, how that affects what you're charging, your average daily rate. So once you do that research, you're going to be able to make a solid decision on whether you want to allow pets, if that is part of your short-term rental strategy, if that's right for you. So that's all I got. What's your next step? Short-term rental investors, you need to look at amenities like a host, not a guest. While it may be nice for you to have a pool, a gym, it may not make financial sense to add those amenities in once you crunch the numbers. Be data driven. And while you may prefer a pool to a hot tub as a guest, as an owner, adding a hot tub might lead to better cash flow in the long haul. So try to take personal preferences out to a decent extent. Be data driven. This is business purpose decision. But knowing the value of different amenities, both on the macro level and for your market where your short-term rentals are located, that's going to help you make smart decisions that unlock more revenue and ultimately more profit from your investment. So do your research, make the right decision, increase your cash flow. Another shout out to Lima One Capital's market analytics team for all the data provided in this episode. Reach out to Lima One, limaone.com. Partner with the nation's premier lender for real estate investors. Not only does Lima One have really an exceptional short-term rental offering, but they do everything from rehabs, rentals, single asset portfolio, new construction, bridge lending, multifamily. Give the crew at Lima One Capital a call, 800-390-4212. I'm Dalton Elliott. This is the Real Estate of Things podcast. Thanks everybody for listening.